the objective for today has really been able to make sure that people are able to get insights about how they do fundraising, how they think about building a business, what investors look for in terms of investing, and getting your perspective in terms of market trends as well. So a couple of areas to cover. Probably the first one is you've invested in a number of companies which, at least I was proud to be a customer of, for example, Slack or Moveworks or others. You were involved, invested in them at the very early stages. If anybody has been a customer of Box, there's a conference room named after you as honoring you as part of that company's story. Slack, I remember as well. Is there anything you can share in terms of what you saw in those companies or in those founding teams that stood out to you for you to be able to move forward and make that investment?
Great. Well, first of all, it's really nice to be here. I see a lot of friends in the audience, and thank you, Yousuf, for doing this. I've been in the world of venture now for almost 20 years, and it's you asked a question about what is it about these companies and these founders that really compel you to invest. And if I look back at the through line, it's almost always a bet on the people who are solving a problem or creating a new market. And if you take, for example, something like Slack, the notion of messaging apps at a time when you had text messaging, you had Facebook messaging, you had GChat, you had email. Well, why do you need another way to message your colleague?
Right.
And then all of a sudden something like Slack takes off inside the enterprise, and I would say I messaged sort of right around the time the product was getting launched, and it was a 10-person company. But I would say that they built a beautiful product with a team of 10 people that was mobile, on desktop, in the browser, and it just worked. It was like
Sometimes it just has to work.
It just has to work. Sometimes, yes. It does the job that it's supposed to do.
Right.
Which in the case of, there was no other product that allowed you to look at your phone, send a message, and then see that message pop up inside the browser instantaneously.
Right.
And it just worked. And that actually came through in the early usage of a product like this.
Right.
So they had, let's say, 5,000 users. Of those 5,000 users, like 2,500 of them, so half of them, would use it every day.
Wow.
So
stickiness is something that
we had found product market fit.
Right.
For the people that were using it, they were using it every day. And so sometimes companies like this come along where you actually have like early data to look at.
Right.
And 10 plus years ago, people weren't looking at enterprise applications and the DAO, the daily active user over monthly active user count. Right. They weren't looking at engagement metrics because before that, in enterprise software, people weren't looking at how active you were with your enterprise software. Enterprise software for decades before that was being bought by, CIOs, you, CFOs, and there was an ROI, a total cost of ownership. It's like those calculations.
Some of us were more adventurous.
Yeah, but it was always like you never thought about how many people were using the product.
Yep.
But that changed as people actually were buying software to get their job done. And I would say that was really if I look at like through line in my career, is investing in products that help people get their jobs done better, in more productive fashion, more efficiency, with more fun. So,
but there's a point there. So, just to dive into that, do you seek them out? I mean, so have you looked at, because of your venture career, have you looked at market trends and said, okay, look, there's clearly something happening here, or has it been the case that you've just, some companies that don't have the data, so then it's about the team. But I just, think about that.
There are definitely breadcrumbs there. I think my background is in semiconductors. I was studied electrical engineering in college, and I came here to Silicon Valley in 1997 to work at a semiconductor company. What's a guy who worked in the semiconductor industry doing investing in software companies, right? And so when I got into venture capital in 2005,
It worked out pretty well. So I just want to say well done.
well, I think but there's a breadcrumb, right? The breadcrumb is that I realized in 2005 that, hey, like investing in semis as a young guy is probably not going to be career making for me in venture. So I started looking at software companies, and actually my first investment was in Box.net in 2007. And the fundamental belief there was that as a student of technology, if I think back to the days of Windows, what was one of the most used applications on a Windows aside from word processing, as it was called at the time? It was probably going to the Windows Explorer looking for files.
Yeah.
The amount of time we all spent looking at like file structures. And so when the world moves into the cloud, applications move into the cloud, storage is one of those natural things that needs to move to the cloud. So you can share files that you're collaborating with your colleagues. And it was one of the first sort of bottoms-up applications of enterprise software there was.
Right.
And this is back in 2007. So I was lucky in terms of timing that I was investing at the time, and I got to ride the wave of cloud software. And Box being one of the very first applications that, Salesforce was there, but it was among the first few bottoms-up adoption of software inside of the enterprise, which then led to Yammer, which led to Slack, which led to things like Figma and Coda and Glean, and other things that you probably know.
So one of the questions that sort of come out, so a lot of founders here have got strong convictions in specific spaces. Maybe it's a market as growing as Pakistan, maybe it's for the region, maybe it's thinking about building a global company. What are one or two things that you've seen that was stood out from a founder perspective? Like, are you able to share any insights from, say, the Moveworks pitch or the Slack pitch or Aaron Levy at Box that people can learn from and say,
Sure.
do more of this? Or,
I think what I found is that, again, the common theme is that really good problem solvers for a very specific problem and solve it better than anyone else has.
Okay.
And there's a clarity of thought around what the problem is, what the solution is, and what the market is. And they're find their way to it. But usually by the time I've gotten there, they've figured it out. And in some way, I've been thinking about the same problem as an investor as they've been thinking about as an operator.
there's affinity and alignment that happens over time.
There's a investor-founder fit that's happening as well. And we call it prepared mind investing. So I have a prepared mind that goes into a specific space. And when I see a founder who's doing what I think they should, like, that's it.
Right.
I want to back you. And so that has to happen. So if it's an area that I'm just kind of coming up on and I'm not as familiar with, then I most likely won't have the conviction. Because what I'm looking to do is build conviction. If it takes me a few weeks or months to build a conviction as I'm meeting a founder, that's probably not a good way to invest. I'd rather have built the conviction before meeting some of these founders. And I think that's how the match happens. But generally, like even at Kleiner Perkins, people have majors and they have minors. A major is like, something about something, and probably as much as the founder about a space in the market.
Right.
And where all some of the pitfalls are, where the traps are, where you don't want to go, what you don't want to build, who you don't want to sell to. So these founders figure out a more elegant way to have built the product, but also get into market.
Is everyone's major at Kleiner Perkins AI at the moment? Or
Of course.
Okay, I'm going to guess 80% of your pitches that you see are AI?
Yeah, probably.
Okay. So with that in mind, you made major investments in Glean, which has done phenomenally well. I spent a lot of time before it was Glean. It was Ask CIO.
Yeah.
That was the name of the title. That's why they asked. So this is one of the CIOs they asked.
Yeah.
Well, like I'm informed. That space in Glean, I remember like content repository intelligence within enterprises. A bunch of companies have tried to do it. It was kind of the nirvana, but kind of just enterprise search in itself. What one or two things that had stood out in meeting with Arvind that you were like, great company in terms of product offering, and then second in terms of the founding team?
Do people know what Glean is?
Yes.
Yes, raise of hands. Yeah, it started out as a way to search all your company's knowledge. And why did we back it? So we actually incubated the company inside of Kleiner Perkins in 2019. So this is like early 2019. I was introduced to through a common friend who had worked with them at Google. And the idea of searching all your company's knowledge seems like an obvious one.
Right.
But there's a catch that there have been dozens of companies that tried and failed before this.
Right.
And there was no company that allowed you to search your company's knowledge. There was the intranet, and you could have like a little search box, Google search box, and search the internet. Even Google, the search company, could not build a product that could search your.
Well, actually, Google had this yellow box. I don't know if you remember. It was like enterprise product. It didn't last long.
It didn't last long. When you have an amazing other business model, you don't really invest in that. So it actually goes back to 2005. When I was at my first year in investing, my firm at the time, US Venture Partners, had invested in a product called X1. X1 was an amazing search product that actually searched across all your emails, Outlook emails.
Oh, wow.
And it would search faster than the Outlook email would. And when so much of the pitches and all the information is inside of email, having a better way to search your email was a big deal.
Right.
And I loved the product. But all it did was it indexed your email. The email that was sitting on your computer, on your desktop, on your laptop, right? Not in the cloud. It was just literally like the 5 gigabyte file of email. So the notion that you could search your email and your documents and your Salesforce records and your Zendesk tickets, like it would work in 2019 because now most of the world's or like a company's knowledge was in the cloud.
Right.
Finally, it was all in the cloud, or not all, but let's say 90%. It had reached a tipping point of where most knowledge was now in the cloud. And it was a good time to build a company that would search all that knowledge. Right. And by the way, no one was doing that. And so here comes one of the most senior search engineers from Google.
And we built a successful company, Storage World rubric.
Yeah, and wants to start a company doing enterprise search.
Amazing.
And it just made sense. And so it was literally a bet on an individual and the idea that made sense where we had a prepared mind, and we backed them. And actually we incubated because they spent the first 18 months of their life inside of our office in Menlo Park here. But and then the pandemic happened and everyone moved home. But they built the first 12 to 15 people were based at our office, and now I think they're maybe like 400 people here in Palo Alto. Yeah. It's becoming a verb almost like Slack in terms of people gleaning information, which is the name of the company.
That's phenomenal outcome. Can I ask you a couple of key things, which I think founders would like to? What have you seen in the pitches? I mean, I've met the founders that you bagged, from Sanjay Berry at Netskope and Sue Butterfield, Michael Buford at Greenhouse, over the course of years. And so, when founders are doing fundraising, what are the one or two things that in a pitch you walked away, you're like, wow, like I'm going to back this founder?
Yeah. So you mentioned someone there, Sanjay Berry, another example of a company where
there's a company called Netskope, cloud access security broker, but much wider than that now, in several hundred million business.
Yeah, big business now, and similar story. Known him for a bit. Meet him. He's like, I want to start this company. He's like, this is the right time to start this company. We incubated again at the office. This is at Social Capital.
Right.
And, I think we gave him like $5 million for 20% of the company at the time. And so it's like, this guy's been thinking about this problem.
Right.
And I fully believe that if he builds what he says he's going to build, he's going to have customers. And that sometimes I say, if they build it, then they will come.
Yeah.
And here you have someone who's extremely competent in recruiting, and within 2 weeks, he had 3 highly technical people from his prior life joined him. Same with Arvind. Within 2 weeks, he had 3 people join him. And so what you're backing is actually people who are so well respected technically that some of their most capable colleagues from the past just drop everything, like, I'm gonna go join him, right, to go build this company with him. And that happened with Netskope, with Sanjay. It happened with Arvind at Glean. And again, it was like, if you built this, customers will come because I know customers want this product. And you just have to build it.
What advice would you give to founders of things absolutely not to do?
I think following what's hot, I guess, is it because even though it's not your domain, it's not your area of expertise, you haven't been thinking about the problem for years, because you have to commit to this journey of building a company for a decade.
Right.
And if you're doing it in something that you're not the world's expert at, there's someone else who is either building it or will build it, and they will have a leg up on you. And typically in technology, as you know, there's one winner. and
Actually, the margin for winning and losing is actually very, very thin.
Yeah. It can be, yeah. And it can be a matter of the head start and then raising more capital faster than anyone else to anoint yourself the winner.
Right.
I mean, you haven't asked me about sort of failures, but the flip side of it is what happens when you back the company that's not the winner?
Right.
And that happens, and it has happened to me over my career as well.
Well, you got to let the witness. So would you be willing to talk about the anti-portfolio?
Sure. I was actually just with someone right before this from Snowflake, and we were talking about, hey, did you know this company that was there a year before Snowflake, but nobody knows about it, that I invested in. And that company just was slightly early to market, but did not execute the way Snowflake did. And Snowflake's a $50 billion company. The other company sold for, I think, $40 million. So in 2012 or 13, whenever we said, you know what, you guys aren't going to be the ones to build the next data warehouse in the cloud.
Right.
Or I think you probably know this company. I know we're talking a lot about enterprise software here, but that's sort of our domain. So OneLogin versus Okta.
OneLogin versus Okta, yeah.
I had a chance to invest in Okta, or at least looked at it, but decided to invest in OneLogin. Okta became the big one, and OneLogin was number 2 or 3, and so technology punishes number 2, 3, 4, and everyone else.
Well, so let's talk about that. So I was an early customer of OneLogin, then customer 8, when there were about 10 people. Spent time with Thomas. Part of the issue, and I think this goes to moving to the next topic about company building. So you sit on a number of boards now, and the issue with OneLogin is that they had a major breach, right? I mean, later on, and it was like, well, you're an identity company, and that's not something that you really, that's kind of, they still kept on going, etc. But Okta had raised a bunch of money at a Signal, and also in parallel built it for a number of reasons why they won. I guess you've been on a board of a couple of companies. What are some of the things, at least in the area of AI now, because everyone's either putting AI in their product or becoming an AI company. What are the lessons you've learned in terms of being able to guide founders during a company building and making sure that they're doing it directly in a good way? Yeah,
company building is done by people, right? And it's your ability to recruit the very best talent. Typically, we're talking about technical talent, and at some point, commercial salespeople, sales leaders, but it starts with technical talent. And sometimes, even very technical companies aren't the ones that thrive and succeed. But I would say that wherever there's been an A+ technical talent that can recruit A technical talent to build a product, which is the number one thing, is building a product in a market that matters, and then having the ability the wherewithal and foresight to hire the right go-to-market machine or build the go-to-market machine at the right time, not too late, but just in time, is sort of like a recipe for success.
Right.
Right. And so you're saying, what's the razor edge margin between those who make it and those who don't? I think those who, if I look at some of these that were the number 2 companies, they were probably not the best technical talent. Right, and I think they didn't build the sharpest product for the market. Right, and I think it comes back to it was not the best product. Okay, it was, and then it didn't, and they could not recruit the best engineers because then as the gap between first and second grew, they continued to it got harder and harder, even to raise capital.
A lot of founders will shy away from, in some cases, crowded markets, right? And they'll be like, well, this feels like the Red Ocean, or these guys are well-funded and successful outcomes. How should they sort of navigate that? I mean, I've worked for companies which Pure Storage was in a very competitive space, Qualys was in a very competitive space, and Moveworks was the one which was starting to get a little bit crowded. Automation Anywhere, of course. So how, I think it's always one of the reasons where, like, I don't want to go into the space because it's crowded. When actually, at least my viewpoint is, if you build a world-class product where you make customers monumentally happy, Zoom, for example, even if it's in a crowded market, it will succeed. Is that?
Yeah, I'm not afraid of crowded markets. And in fact, one of the other companies in the anti-portfolio is Zoom, where in 2013, 14, 15, I felt like there was a need for a better way to do video at the workplace. There was already WebEx, there was GoToMeeting, there was
video.
there were a bunch of them, right? And but at the same time, there's a belief that video is so incremental. Why does it? What difference does it make you have video in the browser now or a video app? And it obviously it did. And but in that case, I would say the failure was not convincing people that it was important enough. I convinced myself it's important enough, but not the people around me. Right. And so you can have that. But that was a very competitive space where, again, going back to Slack just worked.
Right.
Zoom just worked. Right. All right. Some of the best products in history are products that just work. And there's so much technology abstracted away, and it's very hard to build what Eric and his team at Zoom built. Yeah. Right. And to build a codec from scratch that works across thousands of miles with very low latency and all that. These are like hard technical problems. Figma seems like a very straightforward product.
Yeah,
it's not. And it's
but it's in a very competitive. I mean, Adobe. I mean,
at the time, to do design inside of the browser window, nobody was doing it.
Right.
And it was like, well, who needs collaborative design software? That was literally the biggest.
About 50 million people, but sure, yeah.
It was the biggest question. That was not even a question, that the reason why people wouldn't invest, or designers like, I don't want a collaborative product.
Right.
And then to your point, like, you have 50 million people later using a product like Figma, and then you have all these other folks who use Canva.
Is it, correct me if I'm wrong, but Figma took some time to get into a place of inflection, is that?
That's correct, yeah.
Right. And so what is the thinking from an investor in terms of, like, you're backing a first-time founder who's building, like, what goes through your head? You're like, okay, because I remember, at a recent Okta was kind of the problem child. They're like, Ben Horowitz used to show up and they're like, oh, how's that little company Okta doing? It's like, yeah, missed another quarter, right? Yeah. And all of a sudden you study.
Well, Kleiner Perkins, first investor in Google, there was a point in time where they're like, we should shut this company down. I kid you not. And this is back to 1998.
Right.
And come 2001, after the .com bubble crash, and you think, well, there's usage and there's server costs, but there's no revenue. Right. AdWords was not yet the business model for the company, so it had zero revenue and a lot of costs. And so, in that case, the business model took time.
Right.
Product worked, but the business model wasn't there. In the case of Figma, fortunately for me, I invested right before things started to take off.
Oh, wow. Okay.
Yeah, but the company was around for 5 years prior.
Okay.
Or 4.5 years.
Right.
And finally, now, the product was able to work because the browser had now, with WebGL and advances that they made, as well as like Chrome had made, that allowed them to actually have low latency design software working inside of a browser window.
Right.
And that was the crux, and they changed the equation for that company. But before that, people had thought that this company wasn't going to make it. Right? Figma was not going to make it. In fact, not a lot of folks wanted to back it when I did.
Wow.
Yeah.
Okay. Let's go into kind of what's happening in the market at the moment. These sizable fundraisers, OpenAI's recent financing, Grok, etc. How should we be reading this? What is your assessment? Would love to just get a perspective here.
Yeah, this is probably the greatest value creation moment in the history of time. And then you see yesterday the largest ever venture financing in history get closed. $6.5 billion at $157 billion valuation in a nonprofit.
See the minor details.
Yeah.
I work in nonprofits all day long. What are you talking about?
So the point I'm trying to make is really that the world is about to change. Things are slow and then they're really fast, and I think the battle for winning in AI, the stakes are so high that you can have an incredible company and product like OpenAI raise that kind of capital because the reward is so massive. It's trillions of dollars. These are big numbers. And how do you even come up with trillions of dollars? Is because AI has the potential to change everything, change how what kind of work humans will do in the future, and what kind of work machines will do for us in the future. And I don't think it's that far away. It'll start with customer support and call centers, where those jobs will, it's not about jobs going away. It's just that machines will do a way better job and satisfy your needs and my needs as a customer of these products, where I don't want to talk to a human giving me custom.
Do you have any ambition to go back to semiconductor investing? I think it'd be great at it.
Yeah, no, that's maybe where we need to all go. But even semiconductors will be designed partially by AI.
Yeah.
And we've backed a company to go do that. And we're already seeing that software development in very large major companies, Fortune 50 companies, 50% of all code is written by code gen products now.
Yeah.
And so things are moving really fast. And it may seem scary, but I also believe in the human ability to evolve and create opportunity for
That's in our DNA, by
That's
the way.
our DNA. We survive.
How we operate,
Yeah.
basically.
We are survival of the fittest.
Yeah.
The species that survives. Right?
Yeah.
And so even though AI is coming and do all these things that we used to all do, we'll find new ways of doing things that fulfill us and produce income for our families and live on this planet. Right.
This year, 38 elections, which were planned, 4 that were unplanned because of the result of a whole bunch of... So there's been a lot of shift geopolitically. One of the things that Pakistani founders always have to face in some way, shape, form, trying to get people out of this mindset is like, look, every market has its sophistication and it has its challenges. You've done investing outside, you've done invest in Pakistan. Like, how have you viewed kind of venture outside of the US? I mean, this is a well-embedded ecosystem. It took time to get to the stage. How do you view, looking at kind of ecosystem globally?
Yeah, I think with the pandemic, everything became so diffuse and so international, both from where talent left the hubs and went all over the world. And I think it's all sort of come back a bit to the hubs. And just to give you a sense, our investments, about 60% of all of our investments are here. And another 20% are probably in New York City. And then the 20% is elsewhere. It might be another city in the US, or it might be somewhere in Europe or elsewhere. So, but it's still concentrated here. And we're all based here in Silicon Valley. We don't have another office outside of this area. And that's by design. We all like to be around a table when we make a decision around making an investment. But we do invest globally. But it just turns out globally means that 60% of all the interesting stuff, maybe more, is here.
Right.
And so, and I would say even founders who we back elsewhere eventually want to be here or will relocate here because they think it's the best decision for them to build their company from here. And we find that to be commonly the case. So geopolitics, I don't know, it's hard. It's a bit like, when I have my conversation with my dad about politics of the U.S. or else things going on in Pakistan. I literally called him like a couple hours ago, and all I hear was like blaring, like loud sounds of him watching Pakistani news on YouTube.
Okay.
And I was like, "What's going on over there?"
Okay.
He's like, "Oh, I'm just watching the news," right? And it's, but that's in our world. Fortunately for me, I don't think the world matters, but like politics.
Does matter.
Doesn't matter.
Doesn't matter.
Doesn't matter. Doesn't matter because I think all this stuff will get built regardless of politics.
Yes. Okay, a couple of key things. Spaces that you do not invest in. So, and I'm doing that as a friend because there's a bunch of people going to email you and I'll be like, I asked that question.
Yeah.
He doesn't invest in that.
Yeah, our mission at Kleiner Perkins is to be the first call for founders who want to make history.
Okay, you're really not helping me with this pie here. Right?
Yeah, but think about what it means to make history, okay? So make history is like there's an ambition and scale you want to achieve with whatever you're building that has eventually large markets that can be addressed, and you'd like to be one of those companies that is on our website scroll like Google, Amazon, Genentech, Compaq, Intuit, Figma, Rippling, Slack, etc. That is the company you want to keep, and so that's what we're looking for,
right.
Okay? And founders who are building today should think that that's what the kind of company they want to build eventually. So what do we not invest in? We're not, we used to have a biotech practice. We don't have a biotech practice. And so we're not doing life sciences or even medical devices. We don't invest in sort of low margin consumer products, for example. Sure. What we do invest in is high margin software businesses.
Okay.
And that's like more than half of what we do. We invest in fintech businesses. We invest in some digital health, consumer tech, like more consumer software. And we also still do hard tech. Hard tech is semiconductors, robotics, some space even.
Are you leading the semiconductor space for Kleiner Perkins? Is this an announcement right now?
Well, you have to.
Legendary enterprise software investor goes back to the roots.
You have to, speak with the dollars invested in. So I'm involved with 3 semiconductor companies. So yeah.
Amazing.
So yes.
Fantastic. You mentioned fintech, sizable ecosystem, fragmented, multiple new companies came into place, Colors went public. Just give us the top level view of how companies either you've invested in or how you view the space.
I think there's most consumers or most businesses pay a big tax to transact via credit card payment rails, and that seems somewhat still antiquated to have such a massive tax. And there's the emergence of digital currencies, especially Bitcoin, and still hasn't fully lived up to its potential of transacting and moving money around. At the same time, there are interesting companies that have emerged that reduce those transaction costs for moving large sums of money. I think there's still a lot of fat in the financial services ecosystem.
Right.
That companies like Robinhood came in, really took out some of the fat, and there's still more to be done around home loans and mortgages and some of the biggest categories of our financial services. And so I don't think right now actually is probably a pretty good time to think about building a financial service or a fintech business because it's been so out of favor. And I don't think there's a lot of innovation or interesting companies that have emerged in the last 3 to 4 years. So.
Final question. Consumer product that you've been most impressed with over the course of the last year?
I'd say Waymo, which is not a startup, but it's probably the most game-changing, eye-opening consumer product that I've used in the last year. I don't know. Do you?
Yeah, I've done the experience. It's kind of mind-blowing experience.
Yeah, I don't know. I don't use Uber in San Francisco anymore.
Yeah, same.
Yeah, so it's completely flipped because why would you want? And I was in New York City last week. I had to jump in an Uber, and it's generally smelly, and the driving is not great. But Waymo, it's incredible. The driving is phenomenal, right?
Yeah.
And they're fast, and in terms of they're driving the speed limit, not driving 5 miles below. It's driving the speed limit, taking the actions that are better than the human actions. So I'm pretty mind blown by that consumer experience.
The reason I like it a lot, especially in San Francisco, is when I'm in it, there's a bunch of tourists who start taking photos of me in the car. For me, it's a big universe. I'm photographed. I'm like, that's great. Hi, yeah, that's me, basically. I mean, my minor moment of fame. Thanks for that, appreciate it. But no one actually, but that's the only thing. But look, thank you for making time for us. We really appreciate it. You've been phenomenal and an inspiration to many of us in venture when I made the shift 4 years ago. So thank you for leading the pack in so many ways and wish you nothing but success time ahead.
Thank you.
Mamoon Hamid, everyone. Thank you very much.